Starlink. Last year, the satellite internet service generated $11.4 billion in revenue, with a 63% profit margin. It doubled its user base to over 10 million subscribers across 100 countries, becoming a global necessity. This public image creates an emotional lure for retail investors. Eager to own a piece of humanity's future among the stars, thousands are preparing for the largest IPO in history. When a company goes public, it must file an S-1 form with the SEC. This document is the legally binding truth about the business model, the risks, and the ownership structure. SpaceX's filing runs 277 pages. While the prologue is padded with 18 photographs of rockets and inspirational quotes about the light of consciousness, the real story begins on page 11. On page 1, the document reveals a massive contradiction. While aerospace companies use specific codes for space vehicles or aeronautical systems, SpaceX filed under industry code 7370, computer programming and data processing. These legal filings reveal a business that bears little resemblance to the rocket company the public expects to find. SpaceX claims a total addressable market of $28.5 trillion. However, their actual space operations account for a microscopic 1.3% of that total. This chart breaks down that market claim. A staggering 93% of the company's addressable market is actually standard enterprise artificial intelligence. This AI segment traces back to the 2022 Twitter buyout. The deal left the banks and investors who financed it facing billions of dollars in losses as the platform's value plummeted. In early 2024, X was merged into Musk's startup, xAI. No cash changed hands. Instead, the losses from the social media acquisition were converted into equity in an AI startup. The final step occurred less than 90 days ago. SpaceX acquired xAI for $250 billion in an all-stock deal. xAI's flagship product, Grok, has virtually zero enterprise adoption and is currently losing over $1 billion a month while it is rebuilt from the ground up. This entire public offering serves as a multi-billion-dollar mechanism to offload the massive debts of a failed social media acquisition onto the public market. The internal priorities are visible in the spending. SpaceX spent $12.7 billion on AI data centers, 4 times more than the $3 billion they spent on Starship research and development. Starship is the supposed flagship of the company's future, yet it accounts for only 14% of total capital spending. The S-1 also reveals a $530 million liability explicitly set aside to cover regulatory lawsuits regarding Grok's generation of illicit and non-consensual imagery. The ownership structure is equally lopsided. Elon Musk controls 85% of the voting power and is permitted to use unvested shares as collateral for personal loans. Furthermore, the charter includes a corporate opportunity carve-out that allows board members to take business elsewhere. By buying the stock, you voluntarily waive your right to a jury trial. Becoming a shareholder means absorbing massive legal liabilities while surrendering the protections typically offered to investors. SpaceX is entering the market with a $1.75 trillion valuation. This prices the company at 94 times its revenue. This is 50% more expensive than the highest price-to-sales ratio in the entire S&P 500, despite the company growing slower and carrying no profit. To maintain this price, share supply is restricted. Only 4 to 5% will be available to the public. This allows the insiders controlling the other 95% to set the trading price, choosing when to sell, keeping the valuation artificially high. These market mechanics have been engineered to protect early investors from losses by breaking the standard forces of supply and demand. Most passive index fund investors rely on stock market rules to protect their 401ks from the high volatility of a new IPO. However, the Nasdaq recently eliminated its 10% minimum free float requirement specifically in time for this listing. A new fast entry rule forces index funds to purchase the stock just 15 days after launch, before the price has time to stabilize. Insiders and early Twitter backers have no lockup period, allowing them to instantly sell their shares to these forced index buyers. You can avoid this trap by checking your passive portfolios and considering a move to information technology funds that track indexes excluding SpaceX. By manipulating index requirements and free float rules, the market has been engineered to facilitate the largest wealth transfer in history, moving billions in billionaire debt directly into retail portfolios.